Coming to preferred. Look, let me hit you with this 2-for-1 about stock. Let's get into it.
It's James the Grill Life is like a movie. I die, I organize. Everything I do's revolutionize. I build what's good for the whole damn hood. Study G's like these really think.
Look, got a mission for you. Now we're back, episode 13. Let's go in and break down some of these stock fundamentals. Just some real entry-level stuff about stock so you can get the difference. Now, oh, calm down there, Wolf of Wall Street. Gotta come up from a pup first. Now, let's get this right here, right? Stock. I get asked this question constantly. They always ask me about stocks and the stock market. Look, there are hundreds of them. There are plenty of different markets and exchanges and all of that. Let's get to some of this now. Stock in this, essentially, is a fraction of ownership of a corporation, okay? It entitles the owner to an amount of the company's stock that's worth times the stock value, times the number of stock you own, making you a shareholder because now you own a part of the company, a share of the company. This is where you get these terms from. We have to make sure the shareholders are happy because the stock ain't going up. Shareholders are not too confident in keeping money with the company. Now we'll talk about dividends a little later. Now, companies, stock is a security because it's backed and regulated by the SEC, financial police. Now, let me say this again because people don't understand what the SEC is. They're the securities, let me say it again, Securities and Exchange Commission, right? SEC, get real familiar with it. They the ones who just hit Robinhood with the record fine of $70 million. Okay, you better be real aware of them. If they come after you, you're getting fined. Ain't no real way to beat them. But now let's get back to stocks. Now, stocks are sold on exchanges before they actually make it to the secondary market. But it's sold on the New York Stock Exchange, NASDAQ, London Stock Exchange, and Shanghai, and there's plenty of other exchanges. But the one we need to really be focused on is New York because we in America. Now, they can be sold on secondary markets, which most of us go to buy. They can be found through brokers such as Fidelity, TD Ameritrade, Charles Schwab, Robinhood, oh my God, Robinhood, E-Trade, and Mirror Edge. If you know Mirror Edge, Bank of America. First off, we're going to get into the different types of stock because there's two major types in the next segment. Oh, my fault. Checking up on some paperwork. Now, there are two types of stock. Like, we need to get real familiar with these terms. There's two types of stock, okay? There's common and then there's preferred. Everybody always want preferred when they hear the name, but it ain't what it's all hyped up a bit. Now, common stock is which is more than 90% of stock trading, okay? Which gives you voting rights as a shareholder. Remember, we now own part of the corporation. So now we get the option to vote on things that go on within the company. Now, if you can't attend and they allow you to send a proxy, let me break down quickly what a proxy is. Proxy is a form to delegate, giving voting power to a representative to enable voting in your absence, which is simply just giving somebody else a chance to vote on your behalf. Because most of us don't care what the corporation is doing because we don't really care about the day-to-day because we don't own a major stake. If we did, we'll be sitting along some of the shareholders of the board of directors when they make major decisions. We'll get into that a little bit later. Now, with common stock, you also receive dividends, but you receive them after preferred stock. That's why people prefer stock. If a company goes bankrupt, preferred stock get paid first before common stock. There's a hierarchy. But preferred stock comes before common stock. So if there's any money left, they'll pay out the stock. That's in terms of bankruptcy, but if you invest in one of the stronger companies, you don't really think about bankruptcy unless you're dealing with more small cap. Now, stock is usually issued out by a company when they're raising capital and they buy the stock back, usually higher than what it's being sold for, to maintain control of the corporation. Because if too much stock get out of hand, they lose majority share. If you lose majority share, now you lose majority voting. If you know anything about politics, the same thing applies. Majority vote rules. So this is why being a stockholder is so important. This is why they do stock splits. To try to dilute some of the power of some of the more minor major stakeholders and to raise additional capital. So it's a whole politics game in the stock realm. I know you're not really interested in all that, just trying to make your bread. But since I'm raising you from a pup to the wolf, I gotta let you understand the game you're walking into. Now, second, you got preferred stock. Now, preferred stock is usually issued to special buyers, some of the more elite around the circle. That's when you'll see preferred stock. Now, let me tell you some of the setbacks of preferred stock. They don't have voting rights, so no, you don't get a say. They prefer you shut up. There's a lot of types of preferred stock. They have extra bonuses. There's about 6 of them, I believe. It's been a while since I covered them. I'm gonna cover those in a different video, breaking down the specific benefits of each preferred stock and how they can vary with additional benefits. But like I said before, they receive dividends before common stock. There's a specific preferred stock that literally gets paid dividends. Even if a company does not issue dividends, they must be paid back dividends. That'll be my favorite. When I start building a dividend portfolio, we're gonna talk about that. Now, generally, they're given by the company, and they're also available on the secondary market with the brokers I mentioned before, but they're less available. They're not really for the public. I don't really think they're too much worth holding if you don't know how to leverage them. Now, look, little bonus tip coming back at you, you know what I'm saying, for those Wolf of Wall Streeters. Now, market cap, you will see is if you pull up a stock, Apple, anybody, versus the shares outstanding. And how you find the shares outstanding is you need to go find the actual balance sheet is going to be at the bottom. They're going to let you know how many shares they have outstanding that the company does not own. That means other people, they're still out there to buy, or other people have them. Now, once you get those two numbers together and you put market cap divided by shares outstanding, you'll know how much stock the company actually has out there. Now, the more stock you own, the more power you have in that organization, which means you have more voting power, which means you really get to make some serious decisions. You start really rubbing some elbows, you know what I'm saying, becoming somebody in the business world, especially within that organization. And if you're in the right organization, you know people within other organizations to boost your own networking. This is one of those bonus tips for people who are trying to come up and be recognized with some of the others. But man, other than that, man, Checkmate 007 out, man. I'm gonna catch you in the next one.
I die, I organize. Everything I do's revolutionize. I build what's good for the whole damn hood. Study